Coming off the back of a week that had seen higher than expected inflation from the likes of Canada and the UK, we're moving into a new week that once again sees inflation dominate with the likes of the core PCE price index out of the US and CPI metrics across different regions of the eurozone ending up with that all-important eurozone figure. Add that to the RBNZ interest rate decision, and we've got a busy week ahead for financial markets. So let's get into it. First and foremost, here are the big ticket items for the week. Most notably, we're going to be kicking off with the IFO business climate number out of Germany. We continue to see Germany struggle, and this is why we have the basis for a potential weakness for the euro going forward, because the ECB remains in a position to potentially cut rates further at the same time that we're seeing expectations for the likes of the Federal Reserve continue to shift away from as many rate cuts and as much of an aggressive pace of easing. And part of it is down to the weakness of the economy, and part of it is down to the inflation outlook, which has shifted for the US, hasn't shifted for the eurozone particularly. Now, I've produced another video alongside this that is going to sort of deep dive into the US economic data over the course of the week, so make sure to check that out, and it really highlights why we're seeing this big sell-off in terms of euro dollar and why it might continue. So Monday, EFO business climate. Tuesday, we really see that focus on the US come to the fore with the FOMC minutes. Of course, recently we have heard from Jay Powell, who essentially says that he thinks that the economy is faring pretty well, so it doesn't necessarily mean he needs to cut rates in a dramatic fashion. And whilst inflation is gradually moving towards target, I think ultimately we all know that there is a feeling that there is a growing risk of a sort of reflationary move now that Trump's coming into power. Inflation on the cards overnight with the early morning Tuesday, UK time, monthly CPI indicator out of Australia. Then we've got the RBNZ interest rate decision. We don't necessarily have the forecast attached to this trading economics chart, but markets are expecting a 50 basis point cut. We could even see a 75 basis point cut. So this could be a really big ticket item for the week. Back to Germany, GfK consumer confidence. And then we see a raft of data coming out of the US, headed up really by that core PCE price index. We've also got the likes of core durable goods, personal income, personal spending. Then Germany, once again, on Thursday, leading the way with inflation. What we typically see is we see all of the different regions of Germany announce their inflation metrics, and then we end up with the German number as a whole, leading us into Friday, where we see the French inflation metric, then the eurozone number, and we've got that GDP number out of Canada as well. So first and foremost, we'll talk about the US. Like I said, I have done a wider breakdown video for that, because if I was to put all of that information into this video, it'd probably be half an hour long. So essentially, we're looking at a raft of data points on Wednesday that come in the wake of the FOMC minutes, and the key parts of that will be the likes of the core core PCE price index, the core durable goods, personal income, personal spending. And so the theme here is, if we see stronger economic data, it pushes expectations for rate cuts. If we see higher inflation, it pushes expectations for rate cuts. So if we see weak economic data, weak inflation, then that potentially weakens the US dollar. If we see higher, stronger data in terms of durable goods, personal income, personal spending, and higher core PCE price index, then that points towards further upside for the US dollar going forward. Now, this is the outlook for core PCE compared to the CPI number. We can see the latest monthly CPI number in the middle on the right is 0.28. We're yet to see the October reading, and that's exactly what we're about to see. But we can see that core PCE figures have been on the rise. The last monthly figure at 0.254, that's above where we need to be to get prices down to target. You can see the 5-month annualized metric at the bottom is essentially where we stand once we strip out a whole host of sort of chunky figures. So you can see here in the middle section where you see sort of November, December, January, February, March, April, all of those have got very elevated figures, right? So when we finally work our way through that, where do we stand? You know, you would hope that's when we get back down to target, but we have been rising recently. So now we're actually not even getting down to target once we get out through that period. So that's why I've utilized the 5-month annualized metric, and I'll probably turn that into a 6-month annualized metric once we get the October reading for the core PCE figure. But what you can see is the CPI number has been moving towards the upside. PCE still remains relatively low, so this figure will be important. You can see that the last number, 0.254, was the highest figure since maybe March or April, whereas this time around you can see 0.3 expected. Worth noting, 0.254 would show up as a 0.3 because they round it up. But nonetheless, you know, we're not necessarily talking about markets expecting this figure to move significantly towards the downside. We're expecting another higher than we would like figure, essentially. So when we're talking about potentially higher inflation, then you're talking about the possibility of a higher US dollar. Let me just jump onto the charts here. So first and foremost, let's change it into the dollar index. So here's the dollar index. Just want to show you from a wider perspective exactly where we stand. You can see we've sort of been rotating through this zone here, and we're approaching the top end, having broken up through this 106.517. We're now approaching this 107.348. Now, there's different ways that you might want to trade this. I mean, you can trade the dollar index, plenty of people do, but also you can utilize the dollar index to give you a wider overview of exactly how the greenback is doing, and then take that into another pair. So you might think, for example, that we are possibly going to see a 50 basis point cut from the RBNZ at the same time that we're seeing repricing away from rate cuts from the Federal Reserve. That would be the kind of thing that might lead you to think you want to short the New Zealand dollar, perhaps. Or the same kind of thing with the eurozone. If we see weak economic data coming out of the eurozone, if inflation comes in low, you might be looking at euro dollar and expecting further downside off the back of that. Or perhaps you think that inflation and this personal spending or core durable goods, all that is going to come in lower than expected. Then you might expect to see a turnaround for this pair. And certainly considering the fact that we've rallied into this zone of resistance, it is the kind of area that you might see that turnaround. Now, I don't necessarily see that happening right now. And you can see here the recent retracement has been a shallow one. We're now looking to break up through this price swing high at 107, essentially. So I'm looking to see a continuation of this bullish trend with a breakdown through 106.12 required to negate that bullish outlook. But until we see that, you know, I think there's a good chance we break through this resistance zone. You can see here on the monthly time frame a long-term uptrend in play here for the US dollar index. And when we're looking in terms of the Fibonacci's, we can see here that the 61.8 is pretty much close at hand. When you look at it on euro dollar, it is exactly on it. Bear in mind, the vast majority of the dollar index, or the biggest weighting, is down to euro dollar. So you have very close inverse correlation between the two. So for me, I think there's a good chance that this is a bottom here following the 61.8 retracement, and that we do see that breakout towards the upside. Of course, once it happens, you'll have greater confidence that we are going to push onwards and upwards from here. But I think that is likely to happen, despite the fact that we have essentially been rotating through these zones. So we've been sort of range bound for over a year now. I think it's likely that we do see that breakout coming into the fore and further strength for the dollar index. In terms of the eurozone, that's the next area we want to be talking about. So, like I said, we've got the IFO business climate figure out of Germany, the GfK consumer confidence figure out of Germany, the inflation metric out of Germany. So Germany is certainly going to be a central point, and retail sales on Friday. But really, the big numbers are going to be the inflation figures in my mind. Do we see inflation remain depressed to the point that we can see them continue to ease rates further and further, despite the fact that people are really pulling back from their expectations around the Federal Reserve? So what markets expecting? The forecast on that monthly metric for German inflation is minus 0.5. Now, you can see here the fact that it remains at 2% in the expectations of the markets. That points towards base effects coming into play. So another very low figure from a year ago. Nonetheless, let's look at the figures for the French number, minus 0.1 expected, the Eurozone figure, minus 0.3. So we're expecting negative readings across the board on the monthly figures here. And certainly that would really hammer home the idea that there's a significant difference between what's happening in the Eurozone and what's happening in the likes of the UK or like the likes of the US. Notably, the UK inflation figure just came out higher than expected in the week just gone. This is the core inflation metric, 2.7 at the moment. And you can see that whilst we have seen some very strong figures for sort of February through to May, maybe June, but certainly through to May. For the time being, you can see here that November figure from last year that's coming into play is minus 0.6, which is exactly what I alluded to. So we're expecting to see negative readings across the board here, but we do have a comparative from last year that's stripped out of minus 0.6, and that's why it's going to be quite difficult to see much disinflation this time around. But certainly, as we move forward and as we head into next year, there's a good chance that we do see inflation heading significantly lower. If you look at that March reading, 1.1 for the month of March alone. So certainly there's an expectation that we do see further disinflation coming into play, albeit it's probably not going to happen this time around. Let's jump into the charts once again, and we'll look this time at the likes of Euro Sterling. So Euro Sterling is one that I follow and I talk about with you guys pretty regularly. You can see a very clear downtrend in play here. And so whilst we see a little bit of chop over the near term, the preference here is for further downside to really play into that once again. The caveat, of course, is the wider trend. So we can see maybe on a monthly time frame, we can see it a bit better. We can see that we have moved through the initial area of support, which is this level here. We're back at it now, but we have tentatively moved through that level. But the bottom end of this zone is down at 0.82. And so we're in this zone of support. Certainly, if we see a turnaround on an intraday basis with a break out from this near-term trend and a move through 0.845, that's when it looks like possibly we could see the bulls coming back into play. At the moment, we've seen a retracement in my mind. So you see a sell-off down through price support, rally up into, let's see how deep this retracement has been thus far. There we go. So we've come into the 61.8, perfectly tagged it. So you're looking as it stands at what looks like an ABC style retracement in Elliott wave fashion, and then the potential resumption of the downtrend. Certainly you get greater confidence that that is exactly how it's playing out if we see a move back below this low here, which is 0.83. But ultimately, however this plays out, I think there's a good chance we do see further downside for Euro Sterling, and the rally up into that 61.8, the perfect tag of it, and now moving lower, does give me greater confidence that we will see the bears resume their prominence, as has been playing out over the course of 2024 and much of 2023, pretty much entirety of 2023 as well. So the bears look to be back in charge, and certainly this inflation data coming out of the Eurozone will be key in that story. And finally, let's talk about the New Zealand region. We've got an interest rate decision from the RBNZ on Wednesday. So overnight Tuesday going into Wednesday. We've also got a couple other figures, business confidence, consumer confidence on Thursday. But really, it's all about that interest rate decision. And the reason why it's interesting is because we have inflation that's moved towards the downside, but also the economy has taken a turn. There's not the strength within the economy that the RBNZ would hope. And we've seen them essentially coming out and providing the basis for people to think they could possibly cut all the way down to 4%. They're at 4.75 at the moment. So that would be a 75 basis point cut. Markets pricing at the moment, no chance of a 25 basis point cut, a 76% chance of a 50 basis point cut, and a 24% chance of a 75 basis point cut. And then beyond that, they're expecting a move down to 375 the next meeting in February. Of course, we skip a couple of months in the meanwhile, so that might have something to do with that. And then 50% chance we move down to 3.5. within the meeting after that. So you're talking about a 50% chance that within the space of 3 meetings, we go from 4.75 down to 3.5. So 125 basis points worth of cuts in 3 meetings. That is hefty, coming at a time where people are now doubting whether we even see a cut at all from the Federal Reserve. So certainly this is going to be a really interesting one to watch out for. You can see in terms of inflation, 2.15 on the headline inflation. For the 2-quarter annualized, because they do it quarterly in New Zealand, the 2-quarter annualized figure is at 2.1 as well. The latest reading was at 0.63. Of course, because it's quarterly, we want to see a metric nearer around that 0.5 figure, but we saw 0.39 prior to that. We saw 0.48, 0.64. So we're sort of rotating around that 0.5 metric. Of course, it's going to have some seasonality as well. So this all seems fine in terms of inflation. And we can see in terms of unemployment that we have seen unemployment in New Zealand overtake the likes of the US, the likes of the UK. So we're seeing that steeper ascent in terms of New Zealand unemployment, and that fear that we're seeing within the region does provide the basis for the RBNZ to think that they can front load some of these decisions when it comes to monetary policy. In terms of the charts, let's just quickly take it onto the Australian dollar against the New Zealand dollar. Of course, whilst the Aussies hold off, the RBNZ going hell for leather in terms of their easing, and you can see this sharp gain that we're seeing in the week just gone continues the bullish theme that has been playing out over the course of much of the year essentially. And you can see here from a wider perspective, we're coming into once again an area of resistance, but it's a very wide area. You can see the top end is at 114, the bottom end, you're sort of looking down at these peaks here. You know, there's a number of them. So we are coming into an interesting area, but quite frankly, I would say that near-term price action is probably going to be more important than that. You can see we're essentially just completing the next leg within this phase, right? So in previous legs, you've always sort of rallied into the prior high and then some. So we can see a similar kind of thing. It's almost like sort of 2/3 of the move is getting back up into the prior high, and then the next third goes beyond that. If we're looking at a similar kind of thing following this deep 76.4 Fibonacci retracement, you'd be pointing towards the possibility of perhaps a move into sort of 1125, possibly 1123, that kind of area. So I do think there's a good chance we're going to see further upside, and in particular if we see continued dovishness coming from the RBNZ, striking a stark contrast to the likes of the RBA. So certainly, you know, whilst it's a central bank decision that some people within the markets might not necessarily be paying too much attention to, this is actually probably going to be a really interesting meeting, because we might even see a 75 basis point cut from the RBNZ to the downside. A breakdown below zero was 1.096 would give me room for me to question this current bullish resurgence after this pullback that we did see in July and August. But ultimately, this trend is very clearly defined. We've pulled back into that deep retracement. We've rallied higher highs, higher lows, and now we're pushing up through this 1.109 resistance level and looking likely that we're going to try and challenge and break through the 111 resistance level that was established back here in July. So the Aussie against the New Zealand dollar, a really interesting chart to watch out for in the week ahead, in a week that's likely to be dominated by the RBNZ, but also from the inflation data coming out from the likes of the US in the core PCE price index, but also the eurozone with CPI metrics coming out across the board.